Welcome, everybody. This is Hector Garcia with Intuit Academy, and today we're going to present how to fix common mistakes in QuickBooks Online, or what are the common mistakes in QuickBooks Online and how to fix them. And we're going to talk about a lot of this is from the accountant's perspective, the accountant that walks into a client's QuickBooks Online file, and we're trying to figure out, how the heck it got so messed up in the first place, and what are the best uh, uh, ideas and best procedures to fix them, and obviously show the client eventually how to do them right, so we don't have to go back and fix it each time. So my name is Hector Garcia. I live and work in Miami, Florida. I've been teaching QuickBooks for a very long time, for Intuit for about 5 years, but on my own for over 15 years. There's my email and my Twitter handle if you want to follow me. I'm a member of the Intuit Trainer Writer Network, which is the reason why I'm teaching webinars like this. And I'm also an Intuit reseller and an advanced pro advisor. Anyway, how to get CPE for this session. Basically, you have to be logged in through the entire webinar, which is approximately 50 minutes or more. It could get to an hour. It's typically an hour exact, but 50 minutes is the minimum. We're going to give you a CPE keyword at some point from the beginning to the middle. You need to write that down. And then we're going to have a polling question where we're going to ask you for that keyword, and you have to get that correctly. So the combination between knowing the keyword at the end of the webinar and being logged in for 50 minutes enables us to send you an email certificate, CPE certificate via email, expected within 3 weeks. Usually takes about 3 weeks. Sometimes we can get it done in 2 weeks. And you must keep a record, copy for your own records. We don't really have a CPE archive on demand for people that lose their certificates. Anyway, it is November, so less than 3 weeks from now. 3 weeks from now, the biggest QuickBooks event in the country is going to be in San Jose, California. It's called QuickBooks Connect. If you go to quickbooksconnect.com, you can check out the agenda. There's going to be thousands and thousands of both accountants and small business owners. And the idea is that we connect with each other. We talk about what's important in the small business world to accountants and to entrepreneurs. And we also specifically got to learn. There are great sessions, kind of like a webinar, but in a real seminar, and it's all run by Intuit, and I strongly recommend that you go. It's worth every penny. Anyway, what is the agenda for today, or what are the learning objectives? So at the end of today's webinar, you should be able to identify how to clean up the mistakes and understand where they came from. I think that's really the issue. It's not just how to fix them, because most accountants can do a journal entry and fix stuff, but it's important to just kind of understand the source on how these mistakes happen, because we can fix them, and not only that, train the client on how not to make the error again. Sometimes it's us who are making the errors. So right there in the chat window, you can click on the link if you want to download the slides. They're on PDF, so click on the chat window to download that. Now, very important in context, we are working with QuickBooks Online Accountant. So if you don't see the green bar in the top, that means that you're not in QuickBooks Online Accountant, so you must be logged in as a user or logged in with your client's account. So you must see that green bar in the top, because we're going to talk about a lot of accountant features, and you need to have that one. And by now, everybody should be on the new generation 3. I don't think any accountants are still waiting to be upgraded to that, but everybody should be on that. Now, out of all the browsers out there, it is important that you use Chrome. And I don't know the technical reasons behind it, but QuickBooks Online was designed on the Chrome architecture. So a lot of the things that we suggest, like making multiple tabs and multiple Chrome users, and all those things really work well in Chrome and not so well on the other browsers. So if you feel like you're using QuickBooks, but it has QuickBooks Online and it acts strange, if you're not on Chrome, that's probably the first thing that you need to fix. Now let's talk about some best practices before we go into a session that we're going to fix a lot of client mistakes, because there's no way to back up, right? That's an issue that we have. We don't have a backup feature. So because there's no way to back up, what we recommend is you take all your financial reports, both accrual and cash, make them into PDF. So that way, when you make all the changes afterwards, you have sort of a hard copy to compare them against, because there's no way to make a backup and restore as of a specific time. Now, log in as an accountant user. Don't log in as your client, because then you can't differentiate who did what, and that's where the audit log when the audit log comes in really handy. And also the accountant tools. We're going to talk about the Reclassify tool. That's only available if you're logged in as an external accountant with a QuickBooks Online accountant. Now, I also think it's important that if you see changes in the financial statements before you as an accountant intervene and then after, and we compare them side to side, and the client sees that the net income difference is 20,000, 50,000, whatever, some material amount, it also helps them really value what we do. So it helps them understand, oh, you know what? Yeah, what you did, was important. The bottom line was changed significantly. My total assets, my total equity changed significantly. So I think that's the important piece. Also, obviously, with the audit log and with the comparative, they see how long it took you, maybe by not wanting to pay the bill again a couple months later. They will be more proactive to try to learn how to do it. And obviously, that's an opportunity for you to also teach your client. Now, there's also the concept of collaborative cleanup, which basically means teach your clients how to do it so they fix it themselves, right? So like teach a man how to fish sort of a story. Or instead of doing a whole year's worth of cleanup at one shot, or a whole quarters, or a whole even a whole month, even for some bigger clients, schedule multiple sessions that are more timely, so you can take all these errors and fix them in smaller chunks. Plus, it's easier to sort of identify how to get to the bottom of it. Um, so for the first group of mistakes, we're going to talk about lists, and we're going to talk about merging them, making them into sub accounts, deleting them, making them inactive. We're going to talk about the account detail type. So let me switch over to QuickBooks Online. So let me log into my QuickBooks Online accountant account. That way I can see that. Oh, there it is. So you see right there, it says QuickBooks Online accountant. That's the crucial piece. Like, you have to be inside that group of QuickBooks Online accountant. So once I'm logged in as QuickBooks Online accountant, I'm going to open up a sample file from here. That way we can do the examples from there. So I'm going to click on the gearbox up here, and then I'm going to go down to a sample file. Where are you? Sample company file. And that will take me to a sample landscaping company that I'm going to use for all the examples here. Okay, so as I mentioned before, if you're logged in as an accountant, you're going to see that accountant box on the top left side. You're going to see that green accountant box. That's how you know you're logged in as an accountant. All the changes that you make, you can track them through the audit log. So here we click on the gearbox and we click on audit log. So the idea is that you do print out your financial statements, profit and loss, balance sheet, whatever, and then afterwards you can also print something limited to a particular user. So let's say I want to see everything that Craig did. Let's say Craig, I'm the accountant. So let's say everything that Craig did pertaining last quarter. So we'll do that last quarter, and then he says show all events. So I can show all events, or I can specifically say what I want. Then I click on apply, and then what I can do is I can print this out. And that could be sort of a record that I have for every single mistake I made. Not that I made, that I changed or I fixed during that session. So I would say that's best practice number one. Print or save a PDF of the financial statements. Then when you're finished, print and save an audit log, and then print the final financial statements, or save them in PDF. That way you can see what it was, what you changed, and what the end result is. I would say that's the main, the main most important suggestion I would give when it comes to that. The second one, which is obvious, I think most people in this webinar know it, which is setting up the closing date password. So we click on the gearbox there, and then we click on company settings. And then depending on whether I'm closing last year before I start working on this year, or I'm going to click on advance, or I'm closing it after I'm done working with the books, I'm going to click here where it says accounting, and then it says close the books. So I'm going to click that checkbox there that says close the books. And basically, whoops, I hit back by mistake. So here under advanced and accounting, I'm going to click close the books, and then it's going to tell me what books would you like to close. So let's say I want to close the last quarter we just did, or the one that we did before, or the one that we're not touching. So another important thing is if I'm engaged to only do one particular time period, I would close it. That way it also prevents me as an accountant mistakenly change something from a previous period. And then I have two choices. I can either get a warning that says, "Hey, be careful, don't make a change," or I can actually be asked for a password. So I'm gonna password protect my closing date my closing date period. That way, I would have to explicitly put a password there if I am planning to overwrite that. Okay, so those are the initial sort of starting points, ideas that we needed to talk about. Let's talk about now list management. So I'm gonna go into the gearbox and click on chart of accounts. And one of the main issues that we have in terms of common mistake is creating redundant accounts. So for example, I'm going to go here in my chart of accounts. I'm probably not going to find the really redundant accounts, but let's say for whatever reason we see office expenses and stationery and printing. These two, let's say they should be together, or maybe supplies should also be together. So there's multiple ways of doing this. Okay. While I have this up, let me open up a new tab and let me go to a profit and loss so I can illustrate it with the financial statements and then illustrate the effect that the changes have. So let me pull a profit and loss here for all dates. And I just want to see in the report here, we do have somewhere, right? We have office expenses, there is $18. And then we have somewhere else, we should have office supplies or whatever, right? So the idea is that we collapse all those transactions into one. I don't think the other one was used. So let me create a transaction real quick. So I'll create a transaction that hits all the accounts, that way we can see them very clearly. So let me hit one account that hits supplies. I'm gonna hit a transaction that hits supplies and another one that hits stationery, and this is for the purposes of displaying them in the reports. So when we compare the changes, this makes sense. So I'm just creating the transaction. So when I look at the profit and loss, I see an entry for stationery and printing, one for supplies, and one for office expenses. So one of the things we could do is merge them, right? So let's take a look at that. But before we do merging, I'm going to strongly suggest that instead of merging, do a group of accounts all as sub accounts of themselves. So what I would do before merging is do this. I will go to new, and then I'm going to click on, let's say, expenses. So I'm going to do an expense category. Where did you go? Expense. There it is. And then we're going to call this office supplies / expenses, right? Whatever. So I will creating one here under detail type. This has no significance from a user's perspective, but it does have a significance from Intuit's perspective in terms of doing analysis or statistics, and also has an important role in stopping you from merging an account, which we're going to see that in a second. So I'll pick one of these categories here, hit save and close. And then instead of merging, so I'm not showing you merging yet, I'm going to show you sub accounts. I'm going to go into each account that I want to collapse or merge, like office expenses. And then I'm going to edit that. And then I'm going to click here where it says is sub account. And I'll make that a sub account of office supplies / expenses. Now, this detail type does not need to be the same when you're making sub accounts, but it does need to be the same when you are merging. And that's going to make tons of sense in a second when we get an error during the merging process. So for stationery and printing, I'm going to do the same thing. And then I'm going to put office supplies and expenses, save and close. And the other one was this one here called supplies. I'm going to edit that. And then I'll make that a sub account as well. Okay, of office supplies and expenses. So by creating a group and making them all sub accounts of each other, so I'm going to go ahead and refresh this report here. I'm going to click on run report again. And by doing that, I now see them all together. Here, where are you? Under office expenses. I'm going to hit refresh again. Just in case it didn't take for the period. So let me hit refresh, and then now they should all be here. There it is. Whoops, there's did I finish making them sub accounts? Yes, I did. So let me close this report and go to the profit and loss again. Sometimes you need a sort of a major refresh for it to take, especially when there's a chart of accounts adjustment. So let me hit refresh again and then see the profit and loss report, hit run. And these are collapsed, right? So I'm going to expand it, and they should be there as a group now. The office expenses as a group. Yeah, there they are. So what I'm going to do is I'm going to click on collapse, and by doing that, I should have one account called office expenses. Where's my date range? It would be called office expenses, and they should all be collapsed together. Now I don't know why they're not collapsing yet. Let me go back into the chart of accounts here and just double check that is correct. Let me click on home, and then I'm going to click on reports and profit and loss again. Now that's strange that it didn't take yet. So let me click on all dates and click on run report, and now they're okay. So that took a while. So there's all the accounts, there's sub accounts, and now they're all grouped into 2018. But by clicking on collapse, now I don't see all the sub accounts. I just see one major group. So I think most people knew that, but the premise I wanted to set is if I actually merge them. So if I actually go back and I'm going to undo all these things. I'm going to undo this on sub account and actually merge them. One of the major problem that I have with merging is that I can't reverse it. I can't undo it. So once I merge, it's as if the two accounts didn't exist at all. So let me take stationery and printing. I'm going to right click on that and click on edit. And then I'm going to change this to office supplies and expenses. And notice what I'm doing is I'm renaming this word for word, letter by letter, to be the same thing as office expenses. And just to show you, I'm going to pick another detail type. I'm going to choose here promotional materials or promotional meals, and I'll hit save and close, and then I'll hit yes, and then I'll get an error saying you can't merge them because they have a different detail type. So this is where I have to observe. Let me copy this for a second. I have to observe what the detail type for office expenses is, which is office and general administrative. I have to observe that before I actually make the merge and make sure that I'm on the same detail type. Then change it to the exact same name as the other account. Then I'm going to be asked, okay, because you have the same name, would you like to merge them? And I'm going to hit yes. And then that's the second option. So the reason why I wanted to make the case for making sub accounts instead of merging is because one time I had a client that I went in there and it made sense for me to merge them because there was two accounts. One was called meals and the other one was called meals and entertainment. And when I saw those two, I figured, well, these two are redundant. I should merge them. Right? That's it. There's no question about it. Then I finished doing the work, and then when I go back, the client asked me a question about travel expenses and whether travel meals are the same category as business meals in the local area when you're entertaining clients. And I said, no, absolutely not. Travel meals are 100% deductible, and business meals to entertain clients are 50% deductible. And my client said, okay, great. So in my chart of accounts, I have two separate accounts. So just make sure that you know that the one called meals is travel and the one meals entertainment is local. And then I looked like a real dummy because I didn't ask, I didn't assume that. And no longer I was able to separate those two. Now, luckily, I had printed the financial statement before, and then I just kind of did a journal entry to reverse it back, but I couldn't go back and undo that merging. Now, for deleting and making inactive, this is another interesting circumstance here. Let me do a new tab here and pull up a profit and loss again, and we'll do it here for all dates. And then I want to show you something. So let's say, for example, that this account here called advertising, I'm not going to use it anymore, right? Let's say it's redundant or I want to use it, and on future periods, I don't want to use it. So one of the things that people do is they search for the account, they right click, and they click on delete. Now, there's no inactive button because in QuickBooks Online, deleting and inactive is the same concept. Now, by deleting it, it will no longer be in my chart of accounts. When I try to create a new check, like for example, if I try to do an expense or a check and I try to type advertising, okay, it's not in my list anymore. See, it actually prompts me to create a new account. So it's as if it doesn't exist from a day-to-day transaction perspective. However, if I try to pull a report that has a transaction, at least one, attached to that account will still show in my profit and loss. Let me close that and run the profit and loss from here, because in these sample files sometimes act a little cookie when refreshing the reports. There it is. So what's going to happen now is the account is now going to say deleted in parentheses. And all that means is that the account has the historical transactions. You can't get rid of it, but it will still show in a balance sheet or in a profit and loss if it's used. Okay, the next topic we're going to talk about is dealing with deleted accounts that need to be used sort of for one-off transactions. So again, so let's say, for example, I'm in my balance sheet, and I'm going to use that specific example. I'm in my balance sheet here, and this asset called truck original cost, let's say for whatever reason it doesn't exist, and most people would, most accountants know that they have to make an adjustment, right? But most clients don't, right? So one of the common mistakes is that they'll go to the chart of accounts, and let's go here to chart of accounts, and then they'll delete. Let's search for the truck here. There it is. This was called original cost, right? So I'm going to select the asset, click on edit, and not edit, sorry, delete. So I'm going to select the asset, click delete, hit yes. When I go to my reports, balance sheet, that's going to show as a deleted asset. There it is, deleted assets. And the accountant, when they come in, the first thing that they would say is, you know what, let's go ahead and adjust it. So let's make a journal entry. So I'm going to click on the create button up in the top. I'm going to click on journal entry, and then I'm going to look for this asset called original cost, and it's not there, right? So this is the common mistake, is that the account is deleted, and then the user tries to create the account again, and it just does wreaks all sorts of havoc. So what we normally do in order to make this work is, let me close that, is we go back into the chart of accounts. We go look for that account that has been inactive, but I have to go in the options here, and not there, sorry. I have to go in the options here and show the inactive. Where is my show inactive button? Is right there in the gearbox. I'm going to click on include inactive, and then I'm going to go look for that inactive account. Where are you? There it is, deleted. I have to enable it by clicking on make active. So I'll click on make active. Then I do my journal entry. Don't remember the exact dollar amount, so I think it was 13,495, I believe. And then we do that against whatever it is, right? Loss on asset sale, whatever it happens to be. I'm not trying to tell you exactly what account you should use for this, but assuming that we know what account we should do for it, and we're getting rid of the asset, you have to temporarily enable the account so you can process it, and then go back into your chart of accounts, and let's look for original cost here. Go back in there and delete it. Perfect. And then once I generate a balance sheet, now I should see a zero balance on that, and I would have to refresh it, make sure this is showing all the dates here. Click on run again, and that will now show a balance, right? So now that will still show there deleted, because it has transactions during the period. So whenever I look at a transaction date in the future that contains a date range where there's no debit and credit for that account will disappear completely from the balance sheet. Okay. All right, so that's those are the processes on dealing with those accounts. Now, reclassified transactions is another tool, and this has probably been covered in many other types of webinars before, but I think it's still important to cover it just in case you've never done it before. Here on the next to the accountant title, there's like a little briefcase, and that's called the accountant tools, and we'll click on that and go down to reclassify transaction. And basically how this works in a nutshell, and I can pick here the period that I'm reviewing. So let's say I'm reviewing July 1st to September 30th, and then I pick the account that I think potentially has errors in it. So whichever one it is. So let's click on one that has multiple transactions. Let's go to this one. So let's say that for whatever reason, these two transactions here that are hitting the telephone expense account are really supposed to hit, let's say, the shareholder distribution account, because they're personal. So all you really have to do is we can click on select all up here, or we can manually choose which ones we want to select, right? That's also possible. So I can choose which ones I want to select. That's totally possible. And then come down here where it says for selected transactions change. I'll click on the checkbox. I'll click on that and I'll go down to the account that I want to use. So I don't have it. So let me create a distributions account real quick. Or let me just use that one that's there already. So I'm going to use the retained earnings, even though um, all sorts of reasons why I shouldn't use that account, but let me just use that one. I'm going to click on reclassify, and it can do 50, 100, 900. I really haven't tested the limits of how many it can do. Now, one thing that is important to keep in mind is if I go back to, let's say, the beginning of the year, and let me go back and select here June 30th. If you remember what we did right before we got started, we actually put a closing date password on this. So if I use this tool and I reclassify something, and I click on reclassify, there's no stopping it. So the only issue with the closing date password and the reclassify transactions tool is that when you get to this level, it completely assumes that you're aware of the closing date. So anything you change prior to that closing date will still happen no matter what, and it will override. So that's something really, really important to keep in mind. The other piece to keep in mind is, let me look at a profit and loss here, and let me do here this year and show you something. So let's say, for example, that there's an issue with some of the income components. Let's say they're hitting the wrong accounts. And then I'm going to click on total income, and then I'm going to pick a transaction that's before the closing date period. So like this one, for example. So this transaction here is before the closing date period. And for whatever reason, one of these items, gardening, it's hitting the wrong account. Now, what happens is I can't change what account is affected by doing it through the invoice. I have to go into the item itself and modify the account the item is pointing to. So to do that, I click on the gearbox, and then I go to products and services, and and then here let me search for gardening. There it is, and then I want to edit the item, and let's say that this item is not supposed to hit the account that's here. So it's not supposed to hit landscaping services. It's supposed to hit, for example, labor, right? So landscaping services, maintenance and repair. That one, sorry. So labor, maintenance and repair. So I'm going to change the transaction that this item is associated with. And this is a key question here. Also update historical transactions. So if I don't hit that checkbox and I hit save and close, that item is only going to affect the new account on new transactions. But if I click on this box and I click save and close, it's going to affect all my historical transactions. And because there was at least one transaction that was before the closing date period, it's going to ask me for the closing date password. So hopefully that was very clear. Like I said, I know it can get a little bit confusing. So downloaded transactions. This is the mother of all beauties about QuickBooks Online, which is downloading the information from the bank and avoiding data entry. And it's also the damnest thing. And I'll tell you what the problem is. The problem is user error. One of the real common issues that we get with online banking is that as the stuff comes in from the bank, like deposits, the users don't have most QuickBooks users don't have the foresight to say, look, that deposit is tied to some payments that I received, or that deposit is tied to an open invoice. So what I end up doing is they map the deposits, or they select an income account, right? Because it makes sense. Look, it's a deposit, it's income, but then the invoice stays open forever. Undeposited funds stay open forever. Income is overstated. That's a common mistake. So I'll kind of cover how that works and how that happens. The other piece is duplicate transactions, and duplicate transactions happen mostly because the user will download the bank manually twice or two or three times, and QuickBooks will keep bringing that information in there. It also happens because, for example, a user did manual data, or an accountant did manual data entry up to, let's say, July 31st, and everything's reconciled, everything's beautiful. Then the user enables downloaded transactions, and downloaded transactions brings 90 days worth of transactions and duplicates some of the stuff from July, and the user doesn't have the foresight to say, you know what, these are already in there, they are duplicated, let's delete them. So I'm going to cover those two right now. So let me go into transactions, and I'm going to click on banking, and I show you exactly what I mean. So let's say, for example, that we enabled online banking after we reconciled. Let's say, let me use the checking account. I think that will be easier. So let's say we enable online banking after we reconciled August, right? So what happens is, because of the 90-day time period, some of the August transactions came in, which are the ones that we're seeing here. Let me just zoom this in. Whoops. Sometimes I try to hit zoom and I hit back. I get confused with the Mac shortcuts and the PC shortcuts. Anyway, what we do is we select the transactions that we don't want to have QuickBooks, push in there again, because it's going to create a duplicate. And then we go up here to where it says batch actions. We'll click on that, and then we'll click on exclude selected. And what that would do is it will remove it from online banking. It will remove it from bank feeds, and it will put it here in the excluded category, which we could always go back and see them. Now, if I wanted to take it one step further and get rid of them from here too, I would select them all and delete them forever, and that would just completely get rid of them. But if you're not 100% sure yet, you want to leave them there just in case, you can leave them there under excluded, and you can undo each one manually if you want, or select all of them and click on undo and bring them back to new transactions. So duplicate transactions, because people don't notice the dates of the transactions, it's a very common error. Now, on the sales side, so let's say, for example, that there is an invoice that this $55 would match to, right? But the user, for whatever reason, just didn't see it that way. So we see the money coming in, and then they come in and they select the customer, which is there, or in this case, it's a vendor, but whatever, let's say that's a customer, and then they come in here and they put it under uncategorized income, or better yet, I like uncategorized income because it lets me know that there's a mistake. But sometimes they actually select the specific account where it says, oh, that was actually decks and patios, and they click on add. So the underlying mistake there is if that customer actually exists and that customer has an open balance, that invoice, that deposit was sent to the income account instead of matching to that invoice. So let me go into a customer here, and let me go ahead and create a customer here real quick, just for that example. So let's say there's a customer, and then let me create a new invoice in this case. So let me click on invoice, and then I'll do an invoice for this new customer, Bessie, and then I'll select one of these products, and we'll put here $55, and then hit save and close. So what happens is, right now the $55 are duplicated. They were brought in through the invoice, and they were brought in through the bank feed. So to fix it, we can do a couple of things. One, we can actually search for the transaction, and let me search it here. Okay, so we can actually go fetch the transaction and change that from where is it? Change that from going straight into the account into matching a payment, but I haven't received the payment yet, so that's not an option there. So I would have to go into new transaction, and I would have to go to receive payment. Okay, and whatever it was, a check, cash, whatever it happens to be, receive the payment. Okay, that's going to go into undeposited funds, and that's okay. And select the invoice that the payment is being applied to. Let me put here $55, and I'll hit save and new. And then if there's an underlying payment, I can go look for the deposit and then fix it by removing this line and replacing it now with the deposit that is supposed to go into. And then we can delete that. And that would be one way to fix it. The other way to fix it is, and I'm not saving that, it's I'm going to go back into banking here, and then I'm going to click in QuickBooks. And what this does is it shows me everything that I put in QuickBooks, and I can actually click on it and see exactly what I did. I'm actually going to undo what I did. So I'm going to send it from in QuickBooks back into new transactions. But now, because there's a customer, and then there's an invoice, so now QuickBooks will, for the most part, it will match it, right? So in this case, it makes sense. All the dates make sense, and now it matches it. If I had to manually create the transaction like I did before, I would click on add, and that's what would cause the issue. So that's what matching does. Now in this case, there's only one for $55. That's why it matched it. But let's do something else. Let's say a different customer also pays me. I'm going to show you exactly what I mean by that. So let's say a whole different customer also pays me $55 for something else entirely. Okay, we'll put a different date in it. So what happens is if I have more than one payment there, it's no longer sure about the matching. Notice that it goes from green match to this gray match, and basically it says that there's more than one possibility. Right, that's what it's telling me. So I have to make a decision of, is it this one, is it that one? Now, how do we know? We have to look at the deposit slip, right? A lot of people ask me, "Oh, Hector, how do I know?" Well, you have to go look at the deposit slip. The other piece you can do is you can click on Find Other Transactions, and then you can also have combined things. So we'll talk about combined transactions in a second. So let me go ahead and accept it for Bessie, and I'll click on Match. And let me do a different example. So let's say this one here for $200, it's a combination of two payments. So let me go ahead and receive two payments for two different customers. So I'm going to click on receive payment, and I'm going to pick the first customer, Amy, and let's say she paid me $75, and I'm going to hit save and new, and then I'm going to pick an entirely different customer. Again, this is all a random, for example, and then he paid me $125, and I'll do a save and close. So now I have two payments matching this deposit. The problem is that QuickBooks doesn't assume that one deposit has multiple customers associated with it. So you're going to have to go into Find Match in this case, and this window will pop up. And then I have to actually find the two transactions associated with it, which is the one for 75 and then the one for 25. And I can sort these by amount also. That will help greatly. And then look for the other one for 125. What happened to my $125 transaction? Am I going crazy or what? For whatever
Well, look
reason,
at the date range, though, Hector, that you have up top.
I
If you're going
don't
to
think.
1018, I think you had it 11/7 or something.
You know what?
So try like November or
You
something.
know what?
Okay.
Thank you. I didn't realize how was I in November? Well, how did that even happen? Thank you. No, that's exactly what happened. I wasn't assuming that I was doing stuff beyond the date. I was thinking maybe something was cookie with the sample file. It does happen, right? Sample files sometimes act a little weird. That's why I wasn't 100% sure what's going on. But Woody's absolutely right. What happened was there's a date range here, and it was being filtered, right? So now there's 125 there. Thank you, Woody. I was gonna do one more thing, which is do the actual manual deposit to fix it, but this will solve the issue. So we'll pick. Let me just pick the couple of transactions that would add up to that, and I'll click on save, and that's how you manually grab transactions from undeposited funds and do them. And again, even somebody experienced like me, I'm not looking at the dates, and I'm going through this, and I can't find them, and the frustration may drive me to just send this straight into the income account. So I think it's a good example. So I did that on purpose. Not really, but okay. All right. So the other important piece is so we showed you undo, we showed you apply payments to multiple deposits, linked transactions. Something that I really like about QuickBooks Online, and sometimes when we're researching a transaction, I'm going to click here on QuickBooks. When I'm researching a particular transaction and I'm trying to see if this transaction that I'm looking at is real, or if it's been matched correctly, here on the top it says online banking matches. So I can click on that, and it'll actually tell me um, with what transaction in the bank it was matched to. And if for whatever reason it was matched incorrectly, I can click unmatch. And then by doing unmatch, what's going to happen is I'm going to close this, and I'm going to go back into my online banking. Now my $55 are going to show up again in my in my uh, in my new transactions bank feed, so I can then match it. Let's say I'm supposed to match it with a different one. It's supposed to be that one, and then I click on match. So that's kind of the workflow with bank feeds, and after a while, you will see that bank feeds are really really powerful. Now, the last thing I want to show you is, let's say for example that we have this $800 here that is actually a check that we wrote. So I'm going to click on create check, and I'm going to do it outside of the banking system. That way we can actually see exactly what this means. So I'm gonna write a check here for $800, and then I'm gonna backdate this and put it in August. I'm gonna hit save and close. And then what happens is if I have a real transaction that matches, the QuickBooks will automatically say, well, this one matches that one. Okay. Now, what happens if that transaction has been reconciled in a previous period? So let me show you that. So if I go and reconcile my bank, and then I'm going to go ahead and reconcile that bank up to August. Let's see, August 31st. And I don't know the ending balance yet. We'll pick that up in a second. So I'm going to select all the transactions. And again, it's not a real reconciliation, but I select all the transactions. And then, let's say the ending balance from the bank really was 3521.40. And I click OK. And then I'll click on Finish Now. Now, notice before I hit Finish Now, this check for $800, it's cleared, right? Because I went through a reconciliation and it's cleared. And let's just look at it again. There's my $800, and this check is cleared. Okay, I can't really tell from here that it's clear, but the check is cleared because I went through the entire reconciliation. Okay, now what happens is if I go into banking and that $800 can't match anymore. If I click on that and say, look, I swear there was a check for 800, and then I go to find match, and it's just not going to be there. I'm not going to find it. It's not going to be available to me. Even if I try to search, $800 or the vendor, whatever. The reason why that is because QuickBooks also assumes that if it's been reconciled, it's not going to be part of my bank feeds feature, because bank feeds is supposed to be for things that we were working on, periods that they've been reconciled after the ones that have been reconciled. That's why it's so important to delete things that are falling in the dates of the previous period. So those $800 may have been mistaken with a different $800. I mean, there could be a duplicate transaction. I mean, the real underlying reason why I would have it cleared and then show up again in the bank, it could be multiple things. But I think the important lesson to learn or to understand is you cannot match something to a transaction that's already been cleared before. Okay, so that's the last piece there. Now let's talk about reconciliation discrepancies. So what could happen is, and let me go back. I'm going to go back into that transaction, and just to show you, I'm going to work on the same transaction, but I'm no longer dealing with online banking. So let's put $800, and we'll look at that same transaction. And let's say that for whatever reason we wanted to modify this, right? So for whatever reason we just don't want to have this amount, or we want to delete it or void it, whatever. If I actually void this, so let me void it. And I like voiding instead of deleting because I can bring it back from the dead, and that's a whole nother story there. But once I void a transaction that's been cleared, although it gave me a warning and I just kind of zipped through it, what happens is when I try to reconcile the next period, so I'm going to click on reconcile, it's not going to let me, because when I hit reconcile now, my balance is going to be off. So here on the reconcile window, we actually can see a column that says changes. And when I click on 800, it would actually tell me which transaction was changed, and it would also tell me the amount that was changed, right? So I can go click on it and put it back to where it's supposed to be in order to fix it. Now, what some people can do is they can actually hover over that reconcile period, and the undo button shows up. That's kind of a hidden button that only shows up on the accountant edition. So if you're logged in as a user, or if your client is logged in, they can't. So if I click on undo, I would actually undo that period, and I can redo the reconciliation. So you don't always have to redo it. That's what the changes column is for, so we can actually track that. So something to kind of think about, instead of undoing and redoing, just look through the changes and fix the changes that were modified. Now, something else that can modify, that can change the reconciliation numbers, and I'm going to go into my check register and show you what happens if the user manually unclears something. So it is possible, and I'm going to go down here to this these transactions here up to August. So it is possible that people are playing with the transaction, with the register, and they click on it, and they click on this little R, and then once you click it, it disappears. And notice how subtle that was. I clicked on it and the R disappeared. And then I click on save. And then what happens is this is telling me you're editing a transaction that's been reconciled. For most users, this is blah, 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 yes, right? Because that's what users do, right? They ignore warning messages. So what happens is if I manually unclear something, I'm going to have the same issue. I'm going to go into into reconciling. So I'm going to go into reconcile. And then when I try to reconcile, I can't because I have a difference. And then when I click on changes, I'm actually going to see the two transactions that were changed. So like for this one, for example, if I click on it, it takes me to the transaction, which I cannot fix from here. I can't manually clear from here. So you have to know that to be able to reverse that transaction that was manually uncleared, I have to go into the register. So I have to go back in the register, find it, and manually clear it again. At the same time, I would be very careful about manually reconciling transactions in here. I strongly recommend that you use the reconciliation period. So I'm going to go ahead with the reconciliation system, but some people just like to override. So that's how I did it. I went back into the register and put the R back in there, hit save. Again, I said blah, 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 yes, save, and that will fix it. Now, when I try to reconcile, that transaction will no longer show as an issue in my reconciliation. See, that's no longer showing there. Let's see what else we have here. So we got manually reconciling, and we got modifying and reconcile transaction, and posting adjustments when the account. Okay, so this happens too. One of the things, let's go ahead and reconcile. Let me undo the reconciliation, and I'm gonna undo it and then redo it. I'm gonna click on reconcile now, and then I'm gonna select the period again, which I think it was August 31st, and this was, let's say, 34/20. Okay, and I'm gonna click OK, and let's say I go through the whole process and I select every transaction, and for whatever reason I can't find what's off. And what a lot of users do is that they say, well, screw it, I'll just enter an adjustment because I just need to move forward and go to my next month, and they'll click on finish now, and then I'll warn them, hey, by the way, we're doing this, and they say, okay, blah, 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 and then we click on auto adjustment. And then what happens is when I click on auto adjustment, it shows on this side now, right? And when I click on auto adjustment, I can actually see the reconciliation report, and I can see the transaction that was created in order to do that. The other thing that's actually kind of cool is on this one is 901.40. I want to show you something. 901.40. Let me search that transaction. You're actually really gonna like this. So notice that in the memo it says reconcile adjustment. Most customers, especially the slick ones, know that if you have it on the reconciliation discrepancy, you're gonna detect it. But what most customers do is that they'll do something slick, like, yeah, I'm just gonna send it to like cost of goods sold or something. so they'll send it like to some account, so it looks like it's buried in there somewhere, right? But what they don't do is they don't change the memo. So I think that memo is sort of like my savior, because if they do that and somehow try to hide that adjustment that I made, I can always go here into the search box. Let me just close that. I go in the search box and search for reconcile adjustment, and then I can look for transactions that have that in the memo field, right? Where it is, reconcile adjustment, and then that transaction shows up. So normally what I do is I either a part of the period I search for the word adjustment or the word reconcile in the memo to see if there has been an adjustment forced in there. And that's kind of one of the ways I do it. The other thing I can do is I can create a custom report. I can do a transaction detail report where here in all reports, and I can search for a transaction detail. I think is review expenses, and then transaction detail. I have to go look for it. I keep forgetting where they put that thing. So I look for a transaction detail report, and I can hear an overview, I think maybe. And then I search that. I put that in the filter, and then I save it. That way, it's a memorized report. Let me do that real quick. Not sales, but let's do transaction list. Let's do a transaction list by customer. No, let's do transaction list by date. I think that's an important thing to show. So let me find that custom report. So I'm gonna go to reports, and then I'll click on expenses, and then let me do an expenses by we can do expenses, transaction list by vendor, something like that could work. And then I go to customize, and then I go down into the memo, and I'll paste that reconcile adjustment and click on run report. And then I'll click here in all dates. And what's going to happen is any transaction, and I have to play with the settings to make sure that I'm showing the details and all that stuff. But in any report that I do, even from the profit and loss, let me do it here from the profit and loss too, because that's another way of doing it. If I do something like this, and then I click on customize, and then I go into, where's my memo field? Um, I have to see if, again, the ideal, let me not dwell into this because we only got a few minutes left. The ideal report is transaction detail by date, but for whatever reason, I can't find it on my in here. So maybe I'm missing something somewhere. On this one, it's called transaction list by date. That's what it's called. But for whatever reason, I just can't find it here, and I don't know if it's the sample file issue. But just trust me, if you find it and you put that in the memo, that could be a custom report you can use to automatically find those. Now, the last common mistakes to do is anything with taxes, sales taxes, payroll taxes. We talked about item mapping already. So what happens with sales taxes and payroll taxes, for example, if you have a sales tax liability, the correct thing to do is to go through the sales tax module and record the tax payment. This is the correct way to record it, right? Because QuickBooks is actually going to track all the sales tax based on all the invoices. But the common mistake that we get is that when, let's say, they do online banking or they write a check, what happens is they'll write a check to the Board of Equalization, whatever the department is that takes care of the sales taxes, or we'll do Department of Revenue, whatever it happens to be. Let's do revenue, and then we'll do a save. And then they'll put here sales tax liability. In this case, let me see what it's called in this chart of accounts. It's going to be, oh, there it is, Board of Equalization, Revenue, Arizona, the revenue payable. These are all like a sales tax payable account, and they'll put it to there, and they hit save and close. And balance sheet wise, this will work out just fine. When I go to my balance sheet, it looks like they're paid off. The problem is when I go record a tax payment, it still shows that the payment is that you're liable for it because you didn't use the correct mechanism to do that. Same thing with payroll taxes. They'll write a payroll tax and they put it to payroll tax payable, and then when you go back into the sales tax module, it looks like you still owe the money. So those you're going to have to undo and do them through the correct system. Now, the other common error here is on their opening balance entries, and this is the last one that we'll cover. So on the opening balance entries, one of the real common things is, for example, they'll create a new customer. Let me show you. I'm going to create a new customer, and then when the new customer is created, an open balance is put right at the beginning. So here, where am I? Where's my open balance? So an opening balance, let's say of 25,000 is put, and then what ends up happening is, because the user doesn't really understand the concept of debits, credits, balances, and stuff like that, they'll create a new vendor, a new customer, a new inventory item with an opening balance. And then what will happen is when I go into my balance sheet, I'm now going to see a spike. And let me just do here all that way I don't make the same mistake as I did last time. And then I'm going to see opening balance equity. And then I'm going to see my opening balance equity all over the place. And if I click on that, I can see all the transactions that are affecting my opening balance equity. So that's another common error, is that they'll create a customer, vendor, or item, increasing payables and receivables, which may be accurate, maybe from past periods or whatever, but it's going to affect my opening balance equity. Okay,
it's unapplied cash payment expense. What would cause that?
Okay, that's a little bit trickier. So let me show that. So I can show you. Let's go ahead and finish the polling question first. So this is what happens. QuickBooks Online and QuickBooks Desktop have a little bit of a different way they behave. What happens is when I'm looking at a cash basis financial statement and I'm looking at a payment that my customer paid me before I created the invoice. So let's say I have a payment on on August and the invoice is in November, and I pull up a financial statement in cash basis that closes in August or September or October, where the payment exists but the invoice doesn't. So what QuickBooks does is it actually creates the income because it hasn't been applied to an invoice. Did that answer the question? What did you think?
Yes, I think so. I mean, I wouldn't know what will cause that. Typically, you wouldn't see that, right? But so I figured you would have seen that before in
Yeah,
your travels.
it's two. There's two reasons why unapplied cash payment exists. One is we have a payment that has no invoice attached to it, right? And we're looking at a cash basis profit and loss. Or two, we have a payment in which the invoice it's in the future. So QuickBooks Desktop works a little bit different. Let me go ahead and close the poll. QuickBooks Desktop will actually put that as a negative receivable and post it on the invoice date. With QuickBooks Online, it actually will post it in your financial statements and cash basis, but because you didn't apply it to an invoice or there's an invoice in the future, that underlying problem exists. Are there any more questions?
No, that's it.
Okay, so more resources. Check out Wikipedia. The Intuit support community is great. Social media channels like Michelle Long's LinkedIn group has 150,000 people. Great place to ask questions and comments. Facebook groups like one called ABBO and the QB Power Hour Facebook group. QB Power Hour webinars, which are the ones that me and Michelle run. Those are great. Intuit Academy webinars like this ones are great. Make sure you log in and sign up to many because there's webinars all year long. The QB Connect, best event to go to, and also there's going to be local QB Connect events that are cert prep or firm of the future type of events, and all the annual conferences that you do live, the QuickBooks VCon, and of course the Pro Advisor program. Everybody in here should log in to be a Pro Advisor if you're not already, because it's free for QuickBooks Online clients. So just go to proadvisor.intuit.com and set up a free account. Training, certification, that's all included. And lastly, if you go to San Jose, California, November 2nd to the 4th to QuickBooks Connect, and you see me and you like the webinar, interrupt me and say, Hector, I like the webinar. Thanks for recommending, and I'll see you there. After this webinar, you should be able to identify common issues, best practices for cleaning up the mistakes, and knowing what resources are out there for additional help. That's it.